to be blunt. I just, it's a hard market for the average investor to watch. But if you are able to watch some of the pieces of the market, you can see that uranium demand is only being temporarily suspended. As people watch to see where the world is going. And so all of the forward leading indicators in the space tell you that we're not even come close to finishing this run in the market that started last year. And so, yes, if you're a savvy investor in the uranium space and you understand that, it makes sense to jump in now while, we've seen this temporary lull in the spot price until yesterday come into play and make things a little bit of a bargain. So yeah, the fact that it was double what was asked for though is still pretty mind blowing. But yes, I was not surprised to see them take advantage.
For decades, uranium has been the forgotten commodity, overshadowed by oil, gold, and other resources that capture headlines. But beneath the surface, a perfect storm is brewing that could transform uranium from an overlooked energy source into the most explosive investment opportunity of the decade. The fundamentals couldn't be clearer. Global electricity demand is exploding, driven by artificial intelligence, data centers, and the relentless push for clean energy. Yet uranium production has stagnated for years, with major mines reaching the end of their productive lives and virtually no new supply coming online. Meanwhile, countries around the world are making a dramatic U-turn on nuclear power, reversing decades of anti-nuclear sentiment in favor of reliable, carbon-free baseload electricity. But what makes this moment truly unprecedented isn't just the supply-demand imbalance. It's the geopolitical transformation reshaping the entire uranium market. From big tech companies signing billion-dollar nuclear deals to governments fast-tracking domestic mining projects, the signs of a seismic shift are everywhere. The question isn't whether uranium prices will rise. It's how explosive that rise will be when the market finally wakes up to this new reality. In a revealing interview with Roger Lemaitre, the CEO of Homeland Uranium and former director of worldwide exploration at Cameco, Lemaitre breaks down the 4 critical factors driving what could be uranium's most dramatic bull market in history. More importantly, he explains why traditional market patterns may not apply this time, and what could trigger the kind of price explosion that transforms entire sectors overnight. As we dive into the interview, please like and share this video, subscribe to the channel, and turn on notifications for instant alerts. We appreciate your support and hope you find this analysis valuable.
What are the main themes and trends that you're watching when it comes to uranium and nuclear energy that you think more investors should be paying attention to right now?
Well, I think if I had to narrow it down, sort of 4 key things. Global acceptance of nuclear power has never been higher. We've never seen the level of incentives required. We're seeing massive growth in the electrical space that even maybe 10 years ago, people wouldn't have thought, even the OEDC countries, we'd see this kind of explosion in electricity demand and the need for clean air energy. We're seeing uranium sector itself becoming a coiled spring and when it comes to pent-up demand. And we're seeing a regionalization of what is and is evolving from a global market in the uranium, the nuclear power in the uranium space, to something that's a lot more regional. And that's both, either by economics or by geopolitics.
Yeah, and what are your thoughts about the growing acceptance of nuclear? It seems like the entire world is taking a 360-degree turn from the days of post-Fukushima, where people would call you crazy for wanting to start up a new nuclear power plant. And now the countries, the outliers still, like Australia, Germany, they're being looked at as crazy for not wanting to embrace nuclear. What do you think caused that fundamental shift?
Well, certainly the way the geopolitical environment has evolved over the last 5 years, energy security is there, and it dovetails in the nuclear side really well with the need for clean air energy, reliable baseload electricity. We're seeing many places in the world where that's been a challenge over the last, few years, and not just, in places where you go, they don't have a reliable grid, but in places where, the grid is always thought to have been very reliable. So yes, the one thing that people absolutely want is they want to be able to flip the light switch on and have the lights come on when they do it. And when that doesn't happen, people look for answers.
Yeah, absolutely. Now it's not only nations, policymakers that have been embracing nuclear. It's big tech as well. The latest being Meta signing a 20-year agreement with Constellation Energy to purchase power from a nuclear power plant in Illinois. Of course, Amazon also signing a deal with Talon Energy to draw nearly 2 gigawatts of electricity from a power plant in Pennsylvania. How do you think this sort of big tech adoption, particularly with AI becoming such a big trend, the more and more data centers that will be needed up ahead, how do you think that's going to potentially impact uranium demand?
Oh, wow. I think when it comes, particularly in most places of the world, particularly in the ODC countries, there are not a lot of places to get stable baseload electricity that aren't already tapped. And so, yeah, you're going to be turning towards nuclear. The small modular reactor is particularly well suited for these needs. I think your high-end tech companies, it's not just a question of stability and baseload demand whenever they want it. It's also, it's definitely a race east versus west when it comes to the AI thing. And so they're going to be considered priorities. And I think it's just going to boost the demand for nuclear. You saw the president come out a couple of weeks ago and ask for a fourfold increase in nuclear energy capacity. Now, whether that happens or not is up to everyone's thing. But even a 25% increase is tremendous compared to where this industry was 5-6 years ago.
And what do you make of the Trump administration moving forward to fast track certain mining projects? We've already seen Energy Fuels' Roca Honda project in New Mexico get the green light to potentially be fast tracked. A lot of other mines as well. What could that mean when it comes to the uranium industry in the United States?
Well, the uranium industry in the U.S., you're looking at about a 47 million pound a year demand for the civilian nuclear reactor. The U.S. is producing, over the last several years, less than 1 million pound of it. So 2% of their demand. There's definitely a dire need to see more of the energy come from within, to become less reliant on foreign sources. Half of the U.S. sources are coming from what I call the more questionable countries in the world. Your Niger, your Russians in terms of uranium products. Kazakhstan, which has been a good supplier over the years, but I think that world is changing. And Uzbekistan, and so you're very much in the Russian influence for sure. And who knows how that's going to shake out? And then it could change radically a year from now, and it may not change for the next foreseeable future. But I don't see a world where the uranium market isn't bifurcated, whether it's officially bifurcated or whether it's done on an economic point of view.
Yeah, I want to get to that bifurcation a little bit later, but first I want to get your thoughts on the Sprott Physical Uranium Trust. They recently announced a $100 million bought deal financing, which ended up being oversubscribed at $200 million, raising capital they will use to acquire more uranium. It wasn't that long ago that people were actually floating the idea that Sprott might be forced to sell uranium just to cover its overhead costs. And yet here we are in what is seemingly a very bullish piece of news for the sector. What are your thoughts?
I guess I probably wasn't one of the people who thought that they'd be selling uranium to cover costs. To be blunt, it's a hard market for the average investor to watch, but if you are able to watch some of the pieces of the market, you can see that uranium demand is only being temporarily suspended. As people watch to see where the world is going. And so all of the forward-leading indicators in the space tell you that we're not even come close to finishing this run in the market that started last year. And so, yes, if you're a savvy investor in the uranium space and you understand that, it makes sense to jump in now while, we've seen this temporary lull in the spot price until yesterday come into play and make things a little bit of a bargain. So, yeah, the fact that it was double what was asked for, though, is still pretty mind-blowing. But yes, I was not surprised to see them take advantage of the opportunity.
Roger Lemaitre identifies 4 key themes reshaping the uranium landscape: unprecedented global acceptance of nuclear power, massive growth in electricity demand, a coiled spring of pent-up demand in the uranium sector itself, and the regionalization of what was once a truly global market. Global acceptance of nuclear power has never been higher, Lemaitre explains. We've never seen the level of incentives required. We're seeing massive growth in electrical space that even maybe 10 years ago people wouldn't have thought possible, even in OECD countries. This shift represents a complete reversal from the post-Fukushima era when nuclear power was considered radioactive, both literally and figuratively, to investors and policymakers. Countries that once led the charge against nuclear energy are now embracing it as essential infrastructure for the 21st century. The driving force behind this transformation? Energy security combined with the urgent need for reliable, clean baseload power. As Lemaitre notes, the one thing that people absolutely want is they want to be able to flip the light switch on and have the lights come on when they do it. And when it doesn't happen, people look for answers. Let's get back to the video.
I want to get your thoughts on the broader issue of lack of meaningful uranium production worldwide. We've seen Kazatomprom face issues with sulfuric acid shortages. This is the world's largest producer. We've seen the coup in Niger, obviously, that has left that whole region in question as a supplier of uranium. Parts of Australia are not, Australia is not only staunchly anti-nuclear power in their government, in many areas they're staunchly anti-uranium mining, something that will hopefully be overcome, but that is certainly a challenge in that part of the world. In the US, we've seen companies like Encore Energy face their own challenges in terms of bringing production online. I mean, the list goes on. If we look to the Athabasca Basin, a lot of people are pointing to NextGen Energy as potentially the next big producer because they have the absolutely best quality and largest undeveloped uranium deposit in the world. But of course, the infrastructure needs to be built out. There's so much that needs to happen before that comes to pass. I mean, people are talking 2030 or later. Denison Mines, another one that is kind of trying to be the first ISR uranium miner in the basin. That could present challenges from a regulatory standpoint. So I guess that long preamble is just to ask, where are these pounds going to come from in the near term, in your opinion?
I wish I had an answer for you, to be blunt. I think it's a very big challenge. I'm a believer that if you can build it economically, there'll be room for you in the market. They will essentially come and buy it from you, particularly depending where you produce from, particularly if you're in the West and in North America, or in particularly the United States, because there's a dire need for it all. I don't know where it's going to come from. I think probably most striking thing, and it seemed interesting, but it wasn't an alarmist, but for someone who's followed the industry for a long time, when the IAEA came up with the Red Book a couple of months ago, and they said to the world, yeah, there's more than enough uranium out there to supply demand, but we're going to need to put money into exploration and mining to actually develop these pounds. I think that was, to me, that's kind of like, it's a watershed moment, because they've always said, for as long as I've been in the uranium industry for 25 years, that don't worry about it. There's so much out there. And there's been zero investment in the space. So that impacts multiple ways, not just our projects being developed as others come off and sort of keep a pipeline going. And it's probably not enough to keep the pipeline going at status quo. But now we're seeing serious growth pressures. And yes, people are a bit of an issue as well, trying to get people in to get this done as well, because they don't have quite the experience. There's only a handful of people who have been doing this over the last decade or so. So it's definitely a huge challenge. And the pace of investment, though, is probably the biggest challenge over since the global financial crisis. There's been very little money put into the space. And even before the global financial crisis, we had $3 billion invested in uranium globally, in a market that, quite frankly, didn't know anything about uranium. And so, I think when you look at this cycle versus the last, there's one meaningful difference in uranium space. And the one is, there's a difference between have and have-nots. Last time it didn't matter. If you put uranium in your name, you could raise money. And I knew a company who raised $40 million just by changing their name to blank uranium from blank something else. But investors are a little smarter this time. They want to see companies with resources. And those companies have greater valuations. But even then, like those things haven't been moving forward because there has been very little investment in the space, including some of the bigger projects. So yes, I think it's a really big challenge. You have 70% of the world's production coming from the world's top 10 mines, 3 of which they're going to be at the end of their lives over the next little while. I think, the last cycle we saw Kazatomprom go from 5 million pounds a year to 55 million pounds a year production over a decade. And it saved the depleting supply of uranium around the world in a market that didn't move in terms of total pounds needed demand. Now we're in a different world. We don't have a Kazakhstan waiting in the wings to take up the slack. And we just don't have the investment in space to go for what's going to be growing demand. So it's going to be a tough spot for anyone producing, for sure, to be able to get there in time.
Are you seeing any interest from the institutional side when it comes to the uranium space? Because obviously that would help bring a lot of pounds online if we saw institutional investment in a big way enter the sector. What are your thoughts on that? Are we still a ways away from kind of large scale institutional investment, or are you starting to see signs that maybe that could start happening?
I think you're seeing signs of that happening, but at a producer level or an imminent producer level. It's not trickling down into the developer level yet. And it's certainly not coming down to the grassroots exploration level yet. It's more of a, can I see it? If I put money in today, can I see a pound out tomorrow?
I want to get your thoughts on the broader issue of the geopolitical bifurcation. This is something we've touched on. Obviously, the ban on enriched Russian uranium, Kazatomprom seeming to be obviously that whole area, Kazakhstan, Uzbekistan, as you mentioned earlier, very much under the political sway in one way or another when it comes to Russia. I mean, it should be noted, Kazakhstan, I don't know if it was 2023 or 2022. I think it might have been 23. They had large-scale riots breaking out in the country, and Putin sent in the Russian forces to put the protest down, showing that there is certainly some sort of connection there. And obviously, all of them are connected to China in terms of cooperation and potentially working together to produce and provide uranium to Chinese reactors as well. So do you think we could be entering a world where the supply chain is bifurcated between East and West? In other words, we see Kazatomprom in Kazakhstan, Uzbekistan, that supply largely going to Russia and China, and then your Western companies, your Oranos, your Camecos, et cetera, producing for the West.
I think we're already there. It's just not been declared the way it actually is. And so if you go back to this last half year at Kazatomprom, as an example, they had an extra special meeting in the fourth quarter last year to approve a contract with one of the Chinese utilities to sell uranium equivalent to half of the company's book value. Now, I don't think anyone knows exactly what that means in terms of total pounds, but I won't be surprised if it's a significant amount of uncommitted production. We've seen the Russian, the Rosatom, have to sell one of their two joint venture collection of mine assets in Kazakhstan, their interest, to the Chinese. And so that just tells me there's an awful lot of flow going to China. And, it could be, certainly there's going to be geopolitics involved in that. But there's probably also economics involved for Kazatomprom too, because currently they can't ship out through the port of St. Petersburg through Russia. So right now, whether it's overtly geopolitical or just economical or a combination of both, it makes sense for them to go to the Chinese. And I won't be surprised that over the next decade, as we see term contracts roll off with Western companies, they don't get renewed or not renewed at the same level. So whether it's economic or geopolitics, I think you're already in a situation where the world's bifurcating.
I want to talk about the current setup when it comes to uranium equities and their performance. We have seen great performance out of the equities recently after quite a long slump. A lot of this driven by the Trump administration's announcement of embracing nuclear and fast-tracking projects, et cetera. However, 5 years ago, most investors in the sector were told from various people that it would take around 5 years for the thesis to play out. Just set it and forget it. We'll all be rich and be cashing out in about 5 years' time. It's actually when I first entered the sector. Interesting side note, UEX was actually the first uranium company that I invested money in back in the day. I still have those UEC shares. However, now a lot of people are getting despondent. Before this recent rise we've seen in the past weeks, investors are throwing in the towel, saying that the thesis is dead. I wonder what your thoughts are here. Is it just taking longer to play out than people thought it would? Are we right on track? What are your thoughts?
Oh gosh, I don't know if you could ever say there's an actual track like it's going to be exactly this. Utilities are always very resilient to changes in the marketplace. They're always able to seem to find a way to keep things going, whether it's managing inventory, depletion, or buying when they can or not. I don't know. It's always seemed to take them longer to get there than everyone thinks it will. And that's always been the case until it's not. And then it explodes like it did last time around. And I think the trick for investors is to watch and see, okay, if the market is truly at the end, and it's so much easier to follow spot because so many people report spot. And just you can't live and die on spot. That's the biggest challenge. There are spot events like what happened yesterday with Sprott that are really important, spot events. But it's looking at if you can get your view on the other parts of the uranium nuclear supply chain and seeing how those are reacting to the changes. It really tells you what utilities are thinking, and you really got to get inside the utilities' head. And the utilities are saying, they're still chasing down contracts right now as we speak. But when the contract available pounds become tight, that's when you're going to see everything move at once. But yes, the utilities are clearly saying that we have not met our contracting cycle, and everyone's been saying they've been under contracting for the last 5 years. So something has to give. And you're now in a market that's way more competitive than it was 5 years ago because you've got new builds growing at a rapid pace, real growth happening in the space. Projects that were put on the back burner or early curtailments being reversed. And you got the SMR development happening now at even 3 years ago. I don't think even your SMR companies would say we expect things to be moving this quickly. So yes, things are changing very, very rapidly. And yet, spot price seems to have come off a high. But all that time, term price has been rising. So, and the SWU prices are still going up, and the conversion prices are still going up, and you can't buy UEP and you can't buy UF6. There's just not any supply out there. So something's got to give somewhere.
I'd love to get your take on SMRs. Do you think this is going to be a major factor when it comes to the uranium supply-demand dynamics? Personally, I think that's kind of a ways out from full-scale mass adoption, perhaps not anytime soon. However, I've spoken to some people, including Lee Gehring and Adam Rosenzweig, who put out some of the best research in the commodities sector, and they think the SMR story is actually more prevalent than people are giving it credit for. How do you see things when it comes to small modular reactors and the potential impact on uranium demand?
If you'd asked me a year ago, I would have said, yeah, this is a 6 to 10 year problem that the industry going to come across. The pace of change in SMRs, and now you add the presidential order on top of that, is really it's just mind-boggling to see how fast it's going to happen. And if you're an SMR developer and you're looking out there and you've got the backing of the AI or the tech companies, you're not going to be in a situation where you're not procuring soon because you are not going to let those contracts could be a problem. So yes, I think what you're going to see in the next year or two is clear winners in that design space. And if they can show that they can produce or they can be built at a reasonable cost, you're going to see very rapid adoption. But I think that's still a 2-3 year window out still. Procurement today, probably not so much, but 3 years down the road, I cut that in half now. But there are people who are much smarter than me than this. But yes, people who are thinking about it are probably...
I want to talk about the pricing, price discovery in the uranium market, because this is a thing that I think a lot of investors have trouble wrapping their heads around, because there is technically a futures market. It doesn't really work. You can't really use it as an indicator. There's the spot market, which everybody seems to watch, and yet which accounts for, on average, 10 or so % of transacted volumes annually. It's updated the most frequently. I think this is the reason why investors look at it. The long-term contracting prices are obviously a much better reflection of the true value of uranium and how it's being priced by the market. But of course, a lot of these long-term contracts have NDAs attached to them, so we don't actually know the prices. We have to kind of rely on companies that are reporting the floors and ceilings for their contracts. This all makes it very confusing for your average person, particularly those who are new to the sector. How do you think this pricing discrepancy in the sector can be resolved, and how do you wrap your head around it?
Oh, well, I guess there's two things that I think about. One is that almost every pound of spot uranium transaction ends up getting flipped into a term contract for utilities. So yeah, spot is really important. And yes, in a lot of these term contracts, spot has an impact, whether it's the floor price, the ceiling price, or an escalating price. Yes, they have an impact. But I try to think more like a utility. The utilities have been extraordinarily able to be robust when it comes to holding things as firm as they can, but until they can't. And then all crap breaks loose, as they say. So I look at it as from how does a utility go about this process? And I think most of us would think that utilities go, I need uranium, so I'll go buy uranium. But utilities don't do that. They work their way backwards down the value chain. So uranium gets converted to UF6, or there's a conversion service that creates a product, UF6, which is then converted or enriched and creates, that's a service. And then there's a product, UEP, that comes out at the end. And it's a sort of 3-year window for them to convert uranium into a fuel pellet. So they work their way backwards and go, okay, well, I'm going to go out and buy a UEP first if I can, because first of all, it shortens the time frame. There's something that's there. And when that becomes tight, they go, okay, it might be cheaper to work my way down the value chain. So I look over at SWU prices, UEP availability, UF6 availability, and conversion availability. And those are like the leading indicators of where uranium is going to go, because they secure their way down the chain that way. So when I look out at today's market, I see SWU and enrichment at an all-time high and not dropped off the peak. I see conversion has just a tiniest little dip in the last month or so, but it's still near its all-time high. And that tells you that utilities aren't done with contracting, because if that were the case, they'd be out there just buying the uranium to fill the rest of their need, because they would already secure the services or products along the way that they need. So yes, and when you look at the last sort of 8 months of where things were going, the last quarter of last year, we were in a weird situation where the term market was in backwardation. And so when that happens, there are multiple players in the market. You have suppliers turning around buying spot price to flip into term contracts. Well, when they're in backwardation, they don't do that, because it makes no sense for them to do so. And so until that change occurred near the new year, where the spot price was finally eclipsed by the term price, we had the change with Trump coming to power, and you have utilities going, well, what do I do? Can I think about buying Russian stuff, or should I wait till I could buy Russian products? Who's going to get tariffed? What's going to happen? So they're just waiting to see where the world's going to go. And all that's doing is cranking into that 3-year inventory. And the inventory isn't fuel rods ready to go into a reactor. It's all those services and products from uranium through fuel manufacturing, and saying, okay, well, I need some certainty as to where things are going to go. So to me, it's just coiling up the spring of demand at the uranium front.
Yeah, you're echoing some sentiments that Grant Isaac, CFO of Cameco, was mentioning not too long ago about fuel buyers. They're not looking at the uranium first. They're looking at conversion, enrichment, fuel fabrication first, particularly in this bifurcated world where we're seeing restricted access to Russian enriched uranium. Obviously, they control most of the world's enrichment capabilities. And at the end of the day, you say you think this is going to eventually translate to much higher uranium prices. When it comes to the fuel buyers and their mentality, Mike Alkin talks a lot about how they're not necessarily incentivized to get the best possible price that they can get for uranium. They just need to secure the pounds. And particularly when we consider that uranium is such a small percentage of the total cost of running a nuclear reactor, are they kind of, I don't want to say out to lunch on this, because again, it's not necessarily their job to watch the market and get the best price. But do you think maybe they're a little bit complacent about securing uranium, and that maybe they should be moving a little faster, and that could blow up in their face a little bit in terms of having to pay much higher prices down the line?
Oh, absolutely. I absolutely believe that's the case. A lot of utilities are in the market. They might run 1 or 2 units. And so they're in the market. They're not in the market every day. They're in the market every so often. And so they rely upon the advice they get from some of the industry consulting groups. And yes, historically, if you're patient, it works out in your favor. If you're a utility, except when it doesn't. So we saw the last time when, it's probably very bad job security to be a uranium fuel buyer for a small utility and not be able to secure something. So security supply is clearly number one, but there is price pressures, especially for those reactors that are on the margin in unregulated markets where every penny counts. So yes, they are shopping for the best price. They're not, but security is certainly number one. Price is number two. But if you're looking forward, they're also very risk adverse. And so to sign a 3-year contract that delivers 5 years out today, not knowing what geopolitics can conspire against you, can you actually take delivery of this product? And then you're scrambling to make things happen at the 11th hour is challenging. And we saw that in the last cycle when things got out of control, the price went real fast, real high, real quick. And people signed long-term, high-price term contracts that even TEPCO was paying, trying to get out of a contract with Cameco in, what was that, 2016, 2017. So 8-9 years later, trying to get out of contracts that were in the sort of $100 a pound range. So yes, you run that risk. However, you also could get supply. So as long as there's term available for utilities to buy, great. The terms of the deals are changing, becoming more seller favorable. But when the screws really get tightened, that's when you'll see things move.
Question for uranium investors isn't whether prices will rise. The fundamentals make that virtually inevitable. The question is what will serve as the trigger for the next major price move. Will it be a major supply disruption in Kazakhstan? A formal ban on Russian nuclear fuel? A breakthrough in small modular reactors deployment? Or simply the steady accumulation of supply deficits finally overwhelming utility inventory management strategies? The convergence of surging electricity demand, supply constraints, geopolitical realignment, and technological breakthroughs in nuclear power creates a setup unlike anything we've seen in the commodities history. Unlike previous cycles driven by financial speculation, this uranium bull market appears to be built on genuine structural changes in the global energy system. The question isn't whether uranium will break out. It's whether investors will position themselves before the market fully recognizes this new reality. The fundamentals have never been stronger, the supply situation has never been tighter, and the demand drivers have never been more compelling. For those willing to look beyond the daily price movements and focus on the underlying transformation, uranium may represent the investment opportunity of a generation. But as with any commodity cycle, timing matters. The uranium revolution is underway. The only question is whether you'll be part of it. What do you think? Are we witnessing the beginning of uranium's golden age? Or will supply and demand dynamics play out more gradually than bulls expect? Let us know your thoughts in the comments below. And if you found this analysis valuable, don't forget to like, subscribe, and turn on notifications so you don't miss our next deep dive into the commodities markets that are reshaping our world.